Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that's got more twists than a pretzel factory. We're going to unpack a company switching accountants like they're changing socks and what that could mean for investors. This could get interesting. Today we're looking at an 8K form from Rosa Holdings Corp. An 8K form is basically when a company has to tell the SEC about big important things that happened. In this case, it's all about their accountants. This report tells us that on April 29, 2025, Rosa Holdings Corp got a letter from their accounting firm, Markham LLP, saying they were quitting. Effective immediately, the company quickly said okay, with the audit committee agreeing to let them go right away. Then the company hired another accounting firm, CBCPAs, also effective immediately. So why the sudden change? Markham, the old accounting firm, resigned. When an accounting firm resigns, it makes you wonder if they had problems with the company's books. The document states that back in November of 2024, CBIZ CPAs acquired Markham's business of attestation. Attestation is basically where accountants verify financial statements. Now, the report from Markham on the company's financial statements from the past 2 years didn't have any bad opinions or disclaimers, but there was a paragraph that expressed concern about the company's ability to continue. This is called going concern. Basically, the accountants are worried about whether the company can stay in business. The filing claims there were no disagreements between Rosa and Markham on accounting stuff during the past 2 years, and up to April 29, 2025. It says the only reportable events or things that had to be reported were about froms in the company's internal controls for financial reporting. These problems were about things like not having enough separation of duties, a weak control environment, and cybersecurity staffing issues. All these things were described in the company's annual report, the Form 10K, filed in April. These are called material weaknesses. In plain English, that means that the company didn't have good control over their own accounting. If there isn't good control over your own accounting, it's easy to make mistakes or have fraud, which is very bad. Rosa sent Markham a copy of this report, the 8K, and asked them to write a letter to the SEC to confirm that Markham agreed with what Rosa was saying about them. Markham did send the letter. That letter is attached as an exhibit to this 8K form. So, Rosa hired CBIZ CPAs to be their new accounting firm, starting immediately. They said that CBIZ hadn't given them advice on accounting or auditing stuff in the past that would have been important in making decisions. They also said there were no disagreements or reportable events with CBIZ CPAs. Exhibit 16.1 is that letter from Markham to the SEC, backing up what Rosa said in the 8K filing. The report was signed by Joseph Rosa, the Chief Executive Officer Ted. Now let's step back and look at the bigger picture. The sudden switch in accounting firms, especially after the first firm expressed concerns about the company's ability to continue, raises a red flag. While the company claims there were no disagreements with the previous firm, the presence of material weaknesses in internal controls is concerning. It suggests that the company's financial reporting may not be as reliable as it should be. The market didn't seem to like the news because after this filling, the stock price dropped from around 1.65 to 1.13 seemed to like the news. Because after this filling, the stock price dropped from around 1.65 to thanks to the company's financial reporting may not be as reliable as it should be. The market didn't seem to like the news because after this filling, the stock price dropped from around 1.65 to 1.3 as reliable as it should be. The market didn't seem to like the news because after this filling, the stock price dropped from around 1.65 to 1.35 at one it should be. Investors should keep a close eye on Rosa's future financial filings. It's crucial to see if the new accounting firm identifies and addresses these internal control weaknesses and whether the company can improve its financial stability. The company had a rough year in 2023 and 2023 and 23 and 25 and 4 and the Hedy Cave. We're going to be going through how to read an annual report. Or the company can't fix their controls and prevent problems. Investors may stay away. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment and subscribe for more corporate deep dives.